Well, shifting focus to the auto pack, then another company to trim its target production for FY19 after Mahindra & Mahindra is Eicher Motors. They have slashed their guidance. Sonia is with us to run us through all those details. Hi, Sonia. Good morning.
Hi, Nigel. Good morning. It seems like it's a season of cutting guidances and, production targets. It started with Escorts, then Mahindra & Mahindra, and now Eicher. Eicher has gone ahead and revised their FY19 production guidance lower to 870 to 880,000 units versus the 925,000 units that they had up until the last quarter. Now, they've said that the reason for lowering the guidance, one, of course, is demand pressures that they're seeing across the industry, and two is the production loss that they've faced because of the strike at their Oragadam Plant in Tamil Nadu. So far, they've seen a loss of about 30,000 units, and on that account, they've trimmed down their guidance. Not just that, they expect a loss of 1,000 units per month at least due to the continuing weak demand in Kerala. And a couple of reasons they say that has impacted demand. One is the price increase because of the transition that they've done to the new ABS norms. Because of that, every bike cost has gone up by about 20 to 25,000 rupees, and that has really impacted demand. There's also been some decline in walk-in and inquiries in some regions, and the dealer inventory level is now less than 2 weeks. A lot of brokerages have written post the numbers. CLSA says it was a weak quarter, but given that the quarter was so tough, the margin resilience was something that they appreciated. They retained and outperformed. They have a target price of 23,900 versus 22,300 earlier. So they've raised their target price. They say volume growth is under pressure, but Nigel, as you would know, CLSA also mentions that the new 650cc bike is seeing a decent performance. Back to you.
All right, Sonia, thanks a lot for that. But also tell us how the Amara Raja numbers were. It was a mixed bag this time around?
It was an unimpressive quarter, Sonal. It was a mixed bag. The revenues were actually lower than what the street was expecting. We were, in any case, expecting a single-digit growth. It came in at about 9% or so. The street was at about a 12% growth, so it was lower than that. But it's in line with peers like Exide. So both Amara and Exide have reported single-digit revenue growth this time around. I guess that's a bit of a disappointment. The margins were in line with expectations. They went up about 130 basis points quarter on quarter, coming in at 14.8% because of the expected decline in lead prices. But I think it's this slower revenue growth that's become the new normal for many of these battery companies. Back to you.
Okay, all right, Sonia, thanks so much for that. Well, we'll slip into a short break. On the other side, we'll tell you what to expect in earnings that are due later today. Stay with us.